Ellen, when you see an IPO like yesterday, do you concentrate on the fact that, the IPO market is clearly healthy? Or do you focus on the fact that this is maybe an unproven company, there's a huge amount of demand, and perhaps this market isn't the sanest right now?
Thanks, Bonnie. I think that when you look at the IPO market, of course, you need to look at each stock on its own merits and what they're looking at in terms of revenue growth, earnings growth, and profitability. But it is definitely a referendum on how healthy the equity market is. And between yesterday and today, you're seeing very healthy IPO action in the aftermarket for a number of the stocks. And this was true last week as well. And what this says to me is that it's a healthy market. It can absorb a lot of excess stock coming to market. And that right now, investors are optimistic. They're willing to give companies the benefit of the doubt, even if they have fairly limited history. And in general, it's a positive signal for the market overall, and not just for the Magnificent Seven, but for the broadening out that we're beginning to see.
Ellen, what might arrest that? Because it does seem like, perhaps there's just a little bit too much ebullience here, that there's maybe a little bit of denial going on, that we're not taking into account all of the things that could go wrong in the next 6 months.
Certainly, if you look at the S&P 500, Vani, it's up 10% year to date. 10%, and we're in the middle of March. That would be a good year in an average equity market world. And so I don't think that we continue to see this kind of optimism and ebullience as we move forward toward the rest of the year. I wouldn't be surprised to see some volatility. What could cause that? It could really be anything. The market is a little bit vulnerable. It's trading a little bit expensive. If you look at it on an equal weighted basis, if you look at it on a market cap weighted basis, it is a little bit expensive. And so therefore, it's at risk of an air bubble. And that could be caused by anything. One of the things we're watching is consumer delinquencies on the credit card front. We're watching jobs, of course. We're watching the commercial real estate world. But right now, none of those things are big enough or significant enough to cause the equity market to retrench. But it could be anything, really, because investors are a little bit overly optimistic, as evidenced by the year-to-date return.